IT is the flavor of the moment, what HCL announced in the morning and what we heard from Infosys 2 days before. Is the worst behind IT sector, and in this today new digital alignment, how exactly can Indian IT companies adopt? Let's take the conversation forward with R Chandrashekhar, former president with Nasscom, Sandip Agarwal, associate director with Edelweiss also. They both join us to share their thoughts on IT. Mr. Chandrashekhar, good morning. Thank you for joining us. A couple of months ago, it appeared that it would be a lost year for IT sector, largely because nobody knew that what will happen on the supply side. Demand we knew would come back, but on the supply side, because of lockdown, nobody knew how Indian IT companies would adapt. But do you think, given the way how demand has stabilized and Indian IT companies had adopted, 2020 and FY21 will not be a lost year for Indian IT sector?
Well, it really depends on how you define lost, because the IT sector was on a certain trajectory of growth. There was a certain broad expectation of growth at a certain scale, with some, of course, ups and downs. But that smooth curve has, to some extent, been impacted by COVID and the whole pandemic, global pandemic. Now, there are two sides to this whole equation. The supply side issues, which is, how this lockdown will affect the industry, its ability to deliver, employees' ability to be productive, and, companies' ability to meet client deadlines, and so on. All of those issues, I think, were handled far better and far more adroitly and with a great deal of agility by the industry than some people thought to begin with. But having said that, I think what we are also seeing in terms of the results in this quarter, ended June 30th, also is a reflection of the fact that supply side constraints, while there are significant constraints, it's not all hunky-dory. Work from home has its own constraints. There are some regulatory issues, there are infrastructure issues, but by and large, nothing much to worry about, no major concerns over there. However, on the demand side, I think the issues are very much there. And if you look at the short-term issues, I think there are certain sectors which have been hugely impacted globally. Travel and hospitality, for example. We're even seeing in the financial sector a little bit of a slowdown for very different reasons, even though a lot more of digital financial transactions are happening. So there's a very uneven impact on the demand side across sectors, and it would be important to look at which companies are catering to which sectors and how that impact will be. The point, I think, which emanates from all of this is that supply side impact was expected to be seen in this quarter, and as expected, it has not shown any major areas of concern. The demand side constraints, especially in the short term, can be expected to show up in the next couple of quarters. And by and large, the industry, I think, is quite optimistic about the medium term and the long term. In fact, one may even go so far as to say bullish when you look at the longer term, because what COVID has done is to accelerate the migration to digital and the digital transformation globally. And that can, only be good news for the sector, notwithstanding a little more protectionist tendencies in certain countries. But I think the industry now is pretty well experienced in terms of not only how the net impact of such protectionist measures pan out, but also in terms of how to deal with. So I think that's the broad picture as I see it.
Okay. Sandeep, can we really write this in stone that the worst is behind the Indian IT sector? The COVID crisis is something which actually has benefited some large IT companies, or I will be slightly naive to assume that it's going to be a smooth rollout from here? What is your sense? I mean, the big picture looking clearer, better, or there are a lot of chinks in the armor?
I think it would be both presumptuous and premature to say that it's all hunky-dory now and from here on it's going to be a smooth ride. Because all of that is talking only about or is only looking at the supply side issues, which, as I said, have turned out to be actually, nowhere near as bad as some people feared they might be. The demand side issues are a very different story because this is a function of recessionary trends across the world, protectionist measures in different economies, and real downturns in different sectors. There are very few sectors, except those which are directly connected with digital, which have actually seen an upswing. Most of them have seen a down, either flat growth or downward trend. And I mentioned particularly, things like travel, tourism, hospitality, and so on, which have seen a distinct downtrend, and that certainly impacts the sector. We've also seen that, in areas like banking, where one might have expected that there could be, upward trend because of greater digitization, in the short run has also been negative, possibly because a lot of discretionary spending, a lot of futuristic planning, all of that has been deferred. So there is also a lot of such deferment of discretionary spends, which is playing out. And I think in terms of the performance of companies, that is probably the effect that one needs to brace oneself for. Though, as I said, that is a short-term negative, but medium-term and long-term is certainly looking much, much brighter. But as far as the current year is concerned, I think, even if the sector is sort of able to maintain its current level and even show modest growth, that would be a phenomenal thing in the current circumstances.
Sure. Sandip Agarwal, hi, morning. We were just talking about the COVID opportunity. While we've not had any Zoom or WeChat emerge from the IT space, it seems that the telecom players are fast catching up and trying to cash in on the opportunity. Can really IT as well bank on the COVID opportunity? And going forward, can we see digital revenues grow as a piece of the revenue pie larger and larger with every quarter passing by?
Yeah, so thanks. And so let me put it this way. So on 8th of June, we have upgraded the whole technology sector, saying 2-3 things. One, we said FY21 is a washout year because you cannot recover all your losses. The half of the world or more than half of the world is in lockdown. But if you see FY22, 23, 24, they look much more promising than pre-pandemic. And why I'm saying so is because online activity, if you see, has shot up to new levels in the developed markets or client market. And when that happens, it leads to a lot of tech spend in medium to long term. And when that tech spend happens, while there are some FANGs companies who have very good in-house tech capabilities and teams in place, and they take on resources from India and other markets and also from the local markets, they indirectly put a lot of pressure on the local talent available. And when that happens, then outsourcing starts with a lag effect. So as rightly Mr. Chandrashekhar said, that near term, we are not ruling out any pain. There is a pain, there is no denial about it. But FY21, even if you grow at 0 or -2%, it should be a good number to look at. But what going forward, FY23, 24, 22, 23, and 24, you could have a meaningful upside in terms of growth. I believe that we will have a good upcycle. And to give you data, last 15 years, if you see 3-4 instances, it has happened. Growth has plunged very badly for one or other reason in one particular year. But then it has come back very strongly in next 2 or 3 years. So I believe that this time will be no different. Also, remember that this pandemic has been particularly positive or good for at least the tech sector in medium to long term. The people's habit will have changed structurally to move more activities towards online. So I see it as a very secular structural thing. And I believe we are probably at bottom of upcycle of demand in the tech sector.
Yeah, sure. Okay, Mr. Chandrashekhar, we've been talking about what really could stall the IT growth. And clearly it's the BFSI retail segments that are actually lagging behind. And the same question that I was chatting with Sandip as well, can really digital compensate for BFSI and retail segments, and what, the step back that they have taken because of the COVID pandemic?
So I think now we are discussing something that goes beyond the fate of the technology sector per se, but whether the technology sector can actually enable other sectors to compensate for the loss in physical market activity by the digital market activity. And obviously the answer to that is not completely, because while a lot of consumer activity has moved to the digital space, clearly there is a lot of that which remains only potential, and which doesn't materialize entirely in the digital space. So if you look at retail, for example, in India, the e-commerce space is only a small fraction, single-digit percentage of the total market space. And if you look at the total market space, then again, you have large malls which have been there in all the cities, and where a lot of the activity was taking place, which remain shut even today, and only the smaller stores are open. So even if you look at that combination, it would be difficult to see that getting compensated. Also, I think the other factor that one has to keep in mind is that while everyone is pretty fed up of the lockdown and straining at the leash to get out of home, but at the same time, I think it's difficult to see consumers returning to the physical markets and to malls at the same levels as before anytime soon. And a certain degree of caution in behavior on a statistical basis is bound to be there and remain for a long time. Also, if you look at the trajectory of COVID itself within the country, while that is a matter for epidemiologists and public health experts to debate, it does seem like at least for the next rest of this calendar year, we are going to be having COVID as a companion, and that certainly also cannot be good news for a lot of these markets. So I think unless we see the reversion to whatever is the new equilibrium, which seems unlikely before at least the last quarter of this financial year or the first quarter of the next calendar year. Till that time, I think it's going to be a very modest revival of demand, and we are actually going to see only a partial restoration. Having said that, it's also, I think, well known and well reported that there are certain segments, which are seeing an uptick for a whole variety of reasons. Mention was made, for example, of private transportation, individually owned transportation, because of apprehensions regarding public transport and an increase in the demand on that account. Similarly, in the digital space, in terms of entertainment and in terms of other kinds of digital content, there has been an uptick in demand. Similarly, if you look at space like telecom, you look at pharma, these are all sectors where the COVID impact would be positive rather than negative. But looking at the economy as a whole, I think still the overall downward trend for the near term and for the current financial year is certainly bound to impact all these segments. And I do not believe that the digital will be able to completely compensate for that. Partly because, we also do not have very adequately strong digital infrastructure to support behavioral shift overnight. There are significant limitations in infrastructure, in the availability of 4G, in the reliability, in the bandwidth, especially even more so when you go down to rural areas. So all of these, I think, are factors which need to be taken into account when we try and look at what is going to be the result of this.
Sure. Mr. Chandrashekhar, Sandip, both of you, thank you so much. I know the discussion could have gone on and all, just so many parameters and moving parts when it comes to Indian IT. But I have to take a break, so I'm going to let you guys go on that note.